Hey everybody, good Friday morning. We're on the floor of the NYSE with Jim Cramer to talk about the markets and the jobs number. Jim, were you surprised to see a little bit weaker wage growth?
Yes, I was, particularly because on the calls that I've been on, almost every company has said, look, freight costs are up and wage growth is up. Pennies in this number, but dollars in the companies I work on. I have a piece in Real Money today about Kroger and how Kroger's raising wages, and a lot of people are not just doing one-time bonus, they're actually raising wage. And so this number did surprise me. It's interesting, retail showed great growth, and I was trying to put together a thesis which said, retail showed great growth, maybe that's Amazon, which is therefore keeping the wages down. Amazon's hiring so many people and not at a high price.
And manufacturing, more jobs than healthcare.
I think that this is amazing, and I've been saying that there's a Southeast renaissance in this country. It's a reindustrialization, given the fact that we have such low energy costs. And it's not being acknowledged. What's acknowledged, obviously, and we talked about NAFTA yesterday with the president, is how inexpensive it is to bring in cars. A whole lot of new cars coming from Mercedes and from BMW. But I would point out that we do have a tremendous advantage when it comes to natural gas, and it's paying off.
And when we got the jobs report last time, everyone was kind of freaking out about the 10-year. Is a 3% 10-year yield still bad for the market?
Yes, it is. It's bad because it's symbolically bad, but algorithms sell. It's one of those things that triggers an algorithm, and there's a lot of money that's run ETF and a lot of money that's run algorithmic, much more, I think, than people realize. So yes, there's just program selling when it hits.
Okay. Meanwhile, Jim, Wynn Resorts, you're expecting a sale sometime soon?
Yeah, I just think that they're cleaning everything up. Now we have the CEO on TheStreet on CNBC today, but one after another of the obstacles that it would take to buy this company are being cleaned up. Harry Curtis, fantastic analyst, actually really point blank says it could be in the cards. I think Las Vegas Sands or MGM could buy them. And
you say Macau is more important than Vegas?
Yeah, Macau's numbers that came out for the Chinese New Year, up plus more than 40%. There's the health in this industry is staggering, and the fact is that Steve Wynn built the best company in the industry. Now, is the company as good without Steve Wynn? No, that's not possible. But it does not mean that the bones aren't there. I mean, he built some beautiful properties, and now someone else is going to reap the advantage. It must just be crushing the guy.
All right, meanwhile, Jim, this week is the 9-year anniversary of the bull market. We call it the Mark Haynes bottom.
Yeah, we do that. Mark was my friend. Mark very rarely made calls. He used to make calls all the time when he was allowed to own stock, and that's what people don't realize. He would say, look, this stock is good or this market. But then he got away from that for multiple years, for 9 years. So when he made the call, it wasn't like he'd been making a series of calls. It was just a call where everyone was panicking, and he just had always been, because I talked to Mark quite a bit about the market, he had been a huge believer in breadth. Whenever it was 9-to-1 negative, he said you had to buy. And he had been waiting for a level of negativity that was just too extreme. And he made his call. And it was always a reminder to me that if you want to know sentiment and how powerful sentiment could be, just go back to his call. The bottom that we had in this market, the Feb 9-10 bottom, came from extreme negativity. As I was always telling Mark, the S&P oscillator is what I use. You have to pay for it. And you got -10. When you got -10, that has proven to be a bottom for almost every single time, other than when Mark Haynes made his bottom, because it was much more extreme than that. But Mark was a remarkable guy. Brought me on TV after a series of blistering email exchanges where he just said basically, oh, you think you're that good? Why don't you come on? And I said, no, I happen to weigh about 30 pounds more than I do now.
You said no?
Yeah, I said, no, I'm not coming on. No, I'm not putting a fat bald guy. No way. He said, if you really believe, you come on. And I remember how frightened I was when I came on, because I knew he was going to hammer me, because it was really very adversarial. And instead, he didn't. He didn't. He was just incredibly nice to me. I remember my dad watching it and just saying, because I was very scared. Because a lot of people do hammer me, and I spent some time on the cross. Everybody knows that. But my dad said he likes you. And like, my dad was a huge Mark Haynes fan, as I was too. And that was it. That's how I started being on CNBC. And Mark was my colleague, my confidant. And his call was remarkable. I think there are a lot of new people in the market who just don't know how strange that call was, how out of body, how seemingly, are you kidding me? Because so many people tried to call the bottom all the way down, and the capitulation for all those bottom callers was right in your face. And he waited for their capitulation. He waited for that huge ratio that showed that there were too many sellers, and then he pounced. What a great call.
Wow, incredible story, Jim, and may Mark rest in peace. But Jim, it makes you kind of wonder, do we go another 9 years in the bull market?
Well, look, I think that we had a setback. We were down 19% when the S&P downgraded our debt. We've had many, many setbacks that Ken Fisher, my friend, has written, wrote a piece for the USA Today not that long ago that talked about all the reversals during this bull and how you can't just declare it a bull market. You have to look at every reversal, because there were periods in this stretch that were, for certain segments, really horrendous. So we have to remember it's a sector market and a market of stocks. But if you had sold and gotten back in, even after tax, you did do great.
All right, Jim, you have a big week of shows coming up next week on Mad Money.
Yeah, I can't reveal what I have, but I work hard when I go out to San Francisco to have people who've never been on TV, and companies that have never been on TV, and companies that don't speak. And it's taken me many years to build up these relationships, but when I get out there, you see them. We're still putting together the list, but probably about 20 interviews, and they're with people who will blow you away. Wow. And I'm very excited.
All right, well, congrats on that. That's CNBC, 6 p.m. Eastern. Jim and I are going to continue the conversation. Please join us on ActionAlertsPlus.com.